Hello and welcome to the Independence Day special broadcast on Moneycontrol. The next week would start with the nation celebrating the 75th year of India's independence. And as our country gears up to mark the 75th Independence Day from the British Raj, it is time for us to look closely at our personal finances. When we talk about independence, the first image that crosses our mind is the defense personnel, the army, the navy, the air force on their duty protecting the nation's security and freedom. But the thought about their financial security and freedom barely crosses our mind. The challenges faced by them and their families, the extreme conditions they work in, the mindset with which they work. Amidst all of this, money matters become mundane for them. So every defense personnel's first priority is to serve nation and protect their people. Amidst all this, protecting their finances for their life after retirement and other financial goals obviously takes a backseat. So, this year, as a part of Moneycontrol's Independence Day special series, we speak with a few retired army men and financial planners to understand the big money management mantras for the defense personnel. So, to dive into that further, I invite our panelists for the day. Major Ashish Chadda, he is a retired army man who is now the Chief Executive Officer at Chadda Investments Private Limited, a firm he founded after retiring from the retired army men and financial planners to understand the biggest is Kumar. He's a retired army man as well, who is now running PK Interiors, a venture founded by him. We also have Gajendra Kothari, who is a certified financial analyst and the MD and CEO of Erica Wealth Private Limited, managing the portfolios of high net worth individuals. Lastly, we have Harshvardhan Rungta, a certified financial planner overlooking the wealth management consulting practice at Rungta Securities Private Limited. I welcome you all. So to dive in with the first question, I would start with you, Mr. Chadda. Since you are a financial planner yourself right now, if you look in the hindsight, what were the major challenges faced by you and your peer defense personnel that acted as a hindrance for you to be able to manage your money well? Chadda, since you are a financial planner yourself right now, if you look in the hindsight, what were the major challenges faced by you and your peer defense personnel that acted as a hindrance for you to be able to manage your money well?
Firstly, thank you for inviting me on this show. You must understand where does the Indian Defence Forces come from? They are essentially the mic is echoing. So essentially, what is happening is that we are an agrarian economy, and bulk of our defense forces. There's an echo coming back.
I'll just check this. Is there any video running at the background for you? Mr. Chadda, can we start again with you answering?
Yeah, I think somebody's mic in the background is.
We'll just check with you and audio again, sir. Till the time, can I speak to Mr. Kumar? So, Mr. Kumar, like you were also an ex-army, you are also an ex-army man, right? So, what were the major challenges that you faced, and the lessons that you learned out of the challenges you faced? Since you introduced yourself by saying that you have always managed your money yourself, but don't have any professional degree where you learned how to manage your money, right? So, like, what were the mistakes and the lessons that came out of it?
See, when I started in 91, I took out 40,000 rupees from my provident fund and made 100% gains. In just 1 year, from 40, I made 80,000. And as a captain, my pay was 3,000 rupees. So that was a big money. But The next year, Harshad Mehta scheme came, and then it again went back to some 40,000 rupees only. So that was a big thing, that equity is not my bread. And that is the same time these HDFC and all these mutual funds came to the market, 92, 93. So I started investing in the mutual funds, and slowly after 5-10 years, when I saw, they gave me huge returns. Those were really times, those kind of returns I have only seen in 2000, when it again after the collapse. So mutual fund I found is for Fauji's, because of limited connectivity. You don't have any broker, nothing. Of course, nowadays you can do it everything online, but in those days there was no such thing. So I feel for a Fauji, they should go to long funds, all large cap and flexi funds, and invest through an advisor, because these punters, they change the horses every year, which sitting in Tawang or sitting in J&K you don't know. But if your manager is there, he will tell you, okay, now this fund is having some problem, change it. So I feel these financial managers, earlier they were also not there, they were just, there were no such qualification. Nowadays you have qualified people, and the fees also regulated. I remember, my biggest mistake, I purchased one ULIP where the premium allocation was 20%. Now no financial manager is charging more than 1%, 2%, which is nothing. So that's my advice to all the Fauji's, because they don't have any internet. They don't have, they, you have to come to down to base to talk to your wife. Forget about internet. So in those scenarios, I think you have to have a manager. That's
Right. Right. So talking about this, like Gajendra, my next question is to you. Like, for example, the posting can be at remote areas also sometimes, right? Where the network connection might not be stable at all times, that you can speak to your managers, to your fund managers, or whether operate an app to see how well your portfolio is doing, right? So in that cases, like you would also have clients defense personnel. So how do you deal with them, and what are the kind of financial, money management planning tips you advise them?
First is that
Yeah.
you should not go
So
for any
Bhavya,
theme
it's
based.
a fairly
Sorry. Carry on.
Yeah, please go ahead.
yeah. So I think see, financial planning is not like something which you require very on an urgent basis. Like it is a planned thing. It can wait for tomorrow also, unless there is a very sudden emergency. Unlike a doctor service where you have to be on call any time of the day. This is very much a planned event in that sense, and that's why, of course, if you don't have connectivity at times, even if you get delayed by a couple of days or a week, I mean, things can go on. What we normally recommend to our investors who are from the financial services background is that they should also let their family know about us well in advance, and we should have interacted with them at some point of time so that they are quite familiar what we do. And so in case if they are not able to reach us, at least through their family members, we can interact and get the problem solved at that point of time. And what we usually see, when most of the time when these defense personnel come to their home for holidays, that's the time they have time on the hand. They want to sit with us, or over a Zoom call now, thanks to technology, they discuss everything around their finances. And usually it's a an annual affair or an half-yearly affair at the most. It's not like they have to see markets on a day-to-day basis. That's what our job is anyway. So when we get them through a plan about the retirement plan or other plans, that is to just take a stock of the situation every 6 months or 1 year and do course corrections if required.
Right. That makes sense. And Harshvardhan, coming to you, like when we're talking about retirement of the defense personnel, especially the army, people from the armed forces, do you think like the retirement, after retirement life, the pension that they get from the defense, is it sufficient to sustain their lifestyle? And if not, like what kind of investment should be made early on that can help retirement?
Yeah, so Bhavya, in fact, when we talk about retirement for the armed forces, so one thing very clearly is the army retirement plan or the pension computation, etc., is so well thought of that even if a retiree is commuting 50% of the benefits that they are eligible for, I mean, they will still have sufficient, money coming every month for their day-to-day living. So if you talk about food, clothing, I mean, that should not be a problem. Shelter, of course, and my experience with the armed forces has been that they're very, very real estate focused. So you'll have most of the senior officers or even jawans for that matter who are fond of buying real estate. So you'll have somebody buying plots, they will have AWHO houses, or they will have a house of their own in any case. So shelter is more or less a very given investment for the armed forces. Now, if you look at the lifetime investments, I mean, DSOP, AGIF deductions are very, very, popular. And in fact, I know of many officers who will in fact increase and go beyond the, mandated deduction. So you will have an AGIF deduction which is happening, and the benefits come to you at the time of retirement. You have your DSOP contribution, which is mandatory, plus the additional that an officer would, or a Jawan in that case, would contribute. Now, all these accumulate into becoming a decent amount of money at the time of retirement. So you will have your leave encashment also coming to you. You will have your commutation if you're doing that. All this put together and the pension that you have, I mean, this is reasonably comfortable for a person to have their food, clothing, shelter requirements. Now, anything beyond that, if you're talking about requirements for children's higher education, for marriage, or any other social obligations that you have, that of course you have to take care of yourself. The army also has a very good option available for the retirees. I mean, there is if you're going for re-employment. So that option, if you opt in, again, there is another 3 to 4 years of employment, that opportunity that you have within the armed forces. So yes, just to sum up your question, should an armed forces retiree do anything special? Well, if you just do your basics right from the time you're in service, you have enough corpus by the time you retire. So I'm not talking about only officers. I talk about even the JCOs, ORs, the officer, the Jawans, and other ranks. Even they will have sufficient corpus for themselves if they're retiring, and if they just do their basic stuff right while they're in service. Yes, to answer that question of yours, there's always room to doing a lot more if you want to on a discretionary part, but otherwise the basic needs are taken care of very well by the armed forces.
Right.
Can I?
So,
Bhavya?
Sorry, coming to you
Can
again,
I-
Mr. Coming to you again, Mr. Chadha. So we are talking about DSOP, right? So we know like the provident fund for the defense personnel is different from the provident fund for the other working class. So could you give a gist of like why is that distinction exist and how does it help, and like the advantages and disadvantages it has had for you in your life?
Yeah, ma'am. So the DSOP is a very good tool for someone who has never done an investment before. So soldiers come from an agrarian background. Essentially, most of the army has been drawn from the areas which are non-Gujarati, non-Marwadi, Chettiar, non-Mangalorean, non-Banya. So that is the predominant mix of the military. For them, it's just sensible to start with the DSOP. Now, the good thing about the DSOP is it is a mispriced asset, from a pure financial bond perspective. So you get a 7%, 7.25% tax-free return on it. So it makes a lot of sense. Now, the challenge with the DSOP is that if I start as a second lieutenant, and if I run this now for the next 15, 20 years, I will get a 7.5% return on investment. But if I also started an index fund SIP simultaneously, and I was fortunate because I have a broking background along with a military background. So I got started with equities, almost from 1987. The return on equity will easily outperform a DSOP investment by almost 50 to 100%. And in case interest rates fall, equity market returns actually go up. So that's a big plus of having a DSOP, but it's also equally advantageous to simultaneously start an equity SIP. And even more now with so much of technology available, if you can start a little bit of foreign equity as well, because the currency keeps depreciating. But it's very difficult to convince people. We've made a small beginning. We have even yesterday I had a call from a soldier. He had a 10.5% return on investment, which was 50% debt. And he was ecstatic about it. So I think the important thing here is that educating people that there is life beyond DSOP. And there's another big bugbear. DSOP should never be withdrawn because the moment you withdraw it, you lose compounding on it. You know, so the trick is to only put that much of money, which you'll probably need to pull at the time of your kids' education or buying a house, or at the time of retirement. Otherwise, let that money compound, and if people can be sensible and set that investment up in some amount of equity and money that they need for liquidity, optimally, if we can put them into a debt fund, it would add a lot of value, because what happens is you end up withdrawing more than what you want from DSOP. And if you withdraw 20 lakh rupees after 20 years, all of a sudden you are losing 1.5 lakhs of compounding.
Right.
I think moderation, a balance in this would add a lot of value. It's very difficult, but to get defense folks to invest into equity. As a nation, we invest 5%. And here your reference point is other soldiers. And, essentially Fauji's enjoy investing real estate, gold, a little bit of bank fixed deposits, and a lot of chit funds, and some cryptos, because that's what you hear and that's what, you're chasing high returns. It never works like that. Money is always made patiently by compounding, and you have to be disciplined. The other thing is the challenge of managing risk outside. On a post, when you're shooting a Pakistani or you're engaging a Chinese guy, your overall risk is being managed. Here, what happens is whatever you see on the internet today is what you end up buying. Last year's 400 NFOs haven't gone anywhere, and most of the IPOs also haven't gone anywhere. So here, there is unfortunately nobody to manage that risk for them. So that's the concept.
True. So when we talk about risk, another instrument that comes into the picture is insurance. So Colonel Kumar, if I ask you, is the Army Group Insurance Fund, which is provided to the defense personnel, is that sufficient? Or did you have to take up a personal term insurance, a health insurance for you and your family? And how has it changed after retirement for you?
The term insurance which Army provides you nowadays is more than what is required. It's a good amount. The only problem is that after retirement, that amount is changed dramatically. So if you feel that it should be topped up, pure term insurance is good. But mixing the insurance with any financial product, I will not advise, because that is, even financial managers also don't recommend that you mix your term insurance with any investment. But while you service, the term insurance and health is taken care of. There is absolutely no problem.
Right. And after retirement, has that changed for you? Any of your goals related to insurance?
Firstly, the term insurance, you have to top it up if you feel some responsibility. But if the children are settled, then they are also insured by their respective companies. And then that requirement for self is not there. And health also, I've seen, nowadays, most of the companies are providing for the parents. Means, though you are covered by ECHS, but as a children, parents also you get, the medical insurance. Otherwise, at 50 plus age, the medical premium is very high.
Right. That makes sense. And another important thing that comes to picture is, and it's a very emotional topic per se, because buying a home is a dream of every person out there, right? So being an army officer, you might have postings at different places, sometimes metro cities, sometimes remote areas. So coming to you, Harshvardhan, do you think buying a home for a defense personnel early in their career or in the mid of their career, is it a good financial decision?
Well, Bhavya, in fact, you will know that defense forces, defense personnel are very, very inclined towards real estate. So it's not about whether they should or not. Irrespectively, I believe every person, including the Jawan to the majors, the captains, lieutenant colonels, brigadiers, they would have invariably more than one real estate. And so I wouldn't go into that area, because yes, real estate has been the traditional favorite of the armed forces for a very long time. It's not only recently. And AWHO has a lot of options available. I mean, so we have defense personnel. I guess every person whom I interact with has a real estate in some form or the other, and they keep looking out for some plots or some property. And particularly, you'll find them in Mao, because re-employment opportunities are great at in Mao. So you'll find a lot of defense people having a lot of property over there as well. So Bhavya, answering your question, should they invest into it? I guess I don't think that's a topic of conversation at all, for a simple reason, because every defense personnel I know, whether it is Army, Navy, Air Force, or the paramilitary forces, all of them have some real estate in some form or the other. What is important to note is that where do you actually go around buying it? So when we are talking to our defense clients, I mean, this becomes a bone of contention because they might look at, say, places like Pune. If you're looking at Maharashtra, so Pune becomes close to Mumbai. You know, so they have places, in different parts, and not necessarily they have tier one. So they very smartly they buy into the tier two cities or AWHO, as I said, which are concessional kind of or preferred rates for the armed forces. So they have very wise investments into real estate. In fact, I would say that in many cases I've seen they are over leveraged into real estate. So there is a time that you might have to consider reducing your exposure to real estate and come to financial assets.
Okay. Obviously. Okay, coming back to you, Gajendra. So while we talk about, liquidity, that's also a very important aspect that comes in. So how do you think, like, what should be the emergency fund requirements for a defense personnel? How much liquidity should they maintain in their portfolio? Like, what is your advice to them on this?
So I think it's a very important question. I usually suggest around at least 6 months to 12 months of expenses to be in the liquid form, which is easily accessible by the family members more so. Because armed forces, people are away from the family sometimes for 12 months in a year, sometimes even longer. There would be small occasions in their family, some kind of, maybe sudden medical requirement or some small purchases that might happen, white goods and other stuff. So, that is when this liquidity can help and unplanned expenses, in the family. So we usually recommend around 12 months of expenses. At least should be there in a liquid fund. It should not be there in the normal bank account. There should be either kind of fixed deposit which they can break easily, or into a liquid mutual fund, debt fund, which is accessible within 24 hours a day. So that is a smart thing. Just one more thing I wanted to add on your last question about the retirement thing.
Sure.
Is what we have usually seen that most of these armed forces, when they retire 40, 50 or 60, they get a windfall sum of money. Because they've never seen such large sum at one go, okay, they are overwhelmed to see this corpus. And that is a very right time for them to get cheated, either by their relatives or by unscrupulous financial, sellers to lure into a scheme where, it's a quick rich get scheme. And because they are less financially literate, they fall into this trap quite easily. So that is one area which I think they need to be treading very carefully. And what I've seen, sadly, most of these armed forces people who have done very well in their army life or defense life ended up actually becoming a security guard somewhere, or because they lost the money, the big lump sum for some quick rich scheme, and they come back to the normal life and they are earning very paltry sum, and they don't have sufficient fund to meet in the requirement. And I've done a session in Delhi for 500 Air Force personnel, and I think what Harshvardhan mentioned, when the very curious thing is that wherever they get posted, they think okay, this is a place where they would like to retire. They fall in love with that place, and they end up buying a real estate there. So in their entire career, they end up investing in 3-4 different real estate, and eventually they would not want to live there because the situation has changed and the children are living elsewhere. And that's when it's very difficult to unwind these things because they're not familiar to that location anymore, and it's big liquid trap,
Right. So the real estate is a big part of every defense personnel's portfolio, is what has come out of this discussion till now, right? So, okay, coming back to you, Mr. Chadha, like, how does your post-retirement life change depending on when did you retire from the army? Let's say there are different regimes about how much pension do you get if you retire before 20 years of serving in the armed forces versus after 20 years. So how does that make a difference for your post-retirement finances?
So, ma'am, coincidentally, I epitomize an Agniveer. So I'm one of those few hot-headed young men, high testosterone, who decided to leave the military without a pension. So I'm ideal from a fiscal deficit kind of a perspective. The government doesn't give me a pension. I gave my best years to the force. I'm having equally good years now. That is besides the point. So I'm a true Agniveer. It's been a hot topic of discussion. So I think what you got to understand very clearly is that Faujis are not trained, military guys. The Navy and Air Force is much better equipped or the technical wings of the army are much better equipped to handle life outside of the military. A small thing is an irritant, not being on time. This thing can be a big put off for somebody who's about to retire and coming on to. So a lot of small things like this, where you're used to things happening on time. Once you've given a word, things will be done. You don't have to check back. So coming back to the finance part of it, the most important thing is to first decide whether you want a pension, commutation, because you have a financial need in terms of a house or in terms of a child's obligation, or if you want to, redo your house. I'm a big votary of not commuting pensions if you do not have a need for money. And the logic is very simple. You see, here you have a sovereign debt outflow, talking from a bond market perspective, and you are trading it for an imperfect market linked instrument. It doesn't matter whether it is equity. Equity could have done 15%, 18%. But when somebody is retiring at 52, 54, 56, or a Jawan is retiring at 38, 40, at that point in time, it is very, very important to have a regular source of income. And like Gajendra very rightly mentioned, when you get a lump sum, you are vulnerable. Even Harshvardhan mentioned as much. And there is so much of pressure, चाचा से कि मेरे लिए ज़मीन खरीद दो, ताई के लड़के से उसको दुकान लगा दो. So I think it's very important at that point in time to avoid taking a lump sum, at least from the commutation of your pension. And if you have surplus money, in your expenditure, if you find that your pension is okay and your rents are okay and your bank fixed deposits are giving you an income, then nothing stopping you from starting an equity safe or buying gold. But my point is, if you work till 52, 54, why the heck aren't you doing things that you enjoy? So why aren't you taking a holiday? Why aren't you buying your wife or taking your wife to her favorite destination? Why aren't you buying her stuff that she always wanted to do? Go into a nice hotel, enjoy a meal. The point I'm trying to make here is that you have to, have cash to enjoy the experiences and do whatever that you have always wanted to do. Now, there's an equally important point here. A lot of Fauji's, the kids are very fired up. If I look around me, all my batchmates, most of their kids have gone abroad. Now, as their kids migrate, ECHS is a very, very important point. And my mother, I have personal example. My father was very well taken care of by the military hospital system. I'm second generation Fauji, by the way. So, but in my mother's case, there have been at least 3 operations where we could not approach the ECHS facility. So we ended up paying. We are very fortunate. We're in a position where we can afford it. But every time I went to the ECHS to take permission for her, I found a whole lot of old widows, and the children are abroad. I think, I'm touching upon a very, very sensitive social point here, that husbands have to take care of their wives because they are going to die 10 to 15 years earlier. Most women are about 6 years younger, and the men are going to die. So you have to teach your women how to manage money. Otherwise, what happens is, the ladies in Chandigarh, one beta is in Canberra, the other beta is sitting in Toronto. Abhi ho gaya program, So they have to be made internet savvy. They must know where are their papers lying. Because this is something we deal with all the time when husbands die. There's a lot of issues around, angst around, where to go, whom to approach. So I think these are very, very important hygiene factors. We see a lot of pension orders, the name of the wife is wrong, her date of birth is wrong, and when people get divorced after marriage, it's a bigger conundrum. So, your documentation, the essential point here is your nomination, your documentation has to be secured correctly, and not only be secured. See, most people don't give their phone numbers, passwords to their phone numbers, and this is universal, and the login to their email ID. Now, how on earth are you going to operate a bank account if you do not have the login to your password, to the phone and to your email ID? So I think it's a basket of things, but the whole point after retirement is you work hard, you get to strangest places within the country. But there was it's great nature, but there are also bullets that fly alongside. So it's important to have a good time and not worry too much about investments. So, our advice to people who are retiring is, make sure that you have a mix of RBI bonds, you have some amount of, these, even though these pension policies are taxable when you get a lump sum, for heaven's sake, please put some money there, put some money into government bonds. And if you have surplus money, then by all means do equity. Don't, God say, come into a PMS just because you have a lump sum, or come into equity. See what happened last year. You don't know when you are entering the cycle, because equities you have to wait for 7-8 years to make a return. So unless you don't get started early, don't for God's sake start at retirement, because if you start investing at 56, you're going to start getting money back at 64. So I think these are some of the hygiene points. But the essence is to have a good time. For that, you need to have a regular monthly income. So don't commute your pension if you don't need the cash for some family requirement.
Right. So you brought in a very important aspect, that how financial security and financial health of your family after you is also really important. So that brings me to our last question, which I have for everyone on the panel today, that what exactly does financial freedom and financial security mean to you? It might have different definitions for different people. So as a defense personnel, Colonel Kumar, what does financial freedom stand for you?
I have set my benchmark. Once a year family holiday means some foreign destination, and I should be able to maintain a good car and change it after every 5 years. And for that, pension is sufficient. Plus these purchases, I use my equity. So whatever, I made a kitty of 1 crore, whatever over and above I make, I just spend it. It's simple.
Right. And Mr. Chadha, what is it for you?
Like I said, I'm an oddball Agniveer. I'm very privileged. I have worked from 6 in the morning in 95, 96. Like I said, I retired without a pension, and I would carry on till 2:30 in the morning working in call centers. So I have a mix of corporate as well as military, defense. It's a very mixed client base. I don't think I am a good benchmark, because we enjoy prosperity thanks to the GDP growth of India and the jumper markets beyond comprehension. But the limited point I would make here is financial freedom for me is the ability to pick up, to be told, Ashish, let's meet in Bangalore, let's go and play golf. I need to, somebody in the family is, wants now to go on a holiday to Rameshwaram. So, from there you go up there, you don't have to come to office. Yet at the same time, if somebody falls sick in office, like we just got a case, he said, we'll need so much of money. I said, don't worry, even though we have health insurance, this idiot forgot to pay, buy it for his kids. So the ability to pay money to somebody who's fallen sick, essentially do everything that you want to do. And next morning when you wake up in the morning, again, you have money in the bank account. I think, which you can again afford to spend. So it's basically when money goes to work for you is when you have financial freedom.
Right. That makes sense. And also, Gajendra, adding to this question, like, what is financial freedom to you, and how do you actually, advise your clients to, have a financial security, financial retirement? You're on mute, Gajendra.
Me, financial freedom is nothing but having more choice, more options in your life. If money cannot buy you, but money can give you a lot more choices. Money can help you buy time. You can buy, spend quality time with family, friends. And the main role of wealth is basically you can wake up every morning and say to yourself, I can do whatever I want to do.
So it's basically
having life, defense life. While you're in your defense life, you have always been used to taking orders from your bosses. You have lived a very disciplined life, never could do whatever you wanted. But now that you have retired, you are kind of you're on your own. So you should be able to exercise those choices that will make you and your family happy.
Right. Harshvardhan, would you like to add about your perspective on financial freedom and how to attain it?
Bhavya, very clearly, financial freedom would essentially mean 3 things. I mean, one is to be able to buy and do things that you feel like doing, wherever money is involved. So it's not the quantum of money; it's just the ability to buy what you wish to buy. I mean, that is, I think, good enough by itself. The other is that there should be a sufficient amount of passive income coming in, which means your money should be earning enough so that you're not dependent on your active income beyond a point. So your day-to-day living should be taken care by your investments. And anything that you do beyond that would be extra. So you're not bound by to working for day-to-day survival purposes. And the third one is when you attain a level of guilt-free spending. So there are always a time that you'd want to, splurge on yourself, spoil yourself, or do something which is not logically right, but you may just want to do it for the sake of it. And when you do that, you should not be feeling guilty about it. So, which means that you provided for those kind of corpus, you've provided that corpus for the guilt-free spending. So, if you attain these kind of things, I think there is sufficient financial freedom that you have. Now, each person would have different levels and quantum to this, but as long as you're able to achieve these three things, I think you're good enough, and you will feel financially free for it.
Right, right. So the two major points that have come out of everyone's perspective and definition of financial freedom is having the money in your bank account every day you wake up, and then having the option to choose it in the way you can. Like that's what financial freedom majorly stands for people out there. So with that, I would like to thank you all to be a part of this panel today. And as we are approaching the 75th year of our independence and celebrating the freedom of the nation, I hope everyone out there also tries to attain a level where they can enjoy their financial freedom as well. With that, thank you so much, and thank you for being on the panel again. And for all the viewers, keep following Moneycontrol for more money-related guidances to you. Thank you.